Types of mutual fund schemes. Mutual fund scheme, categorized by SEBI to guide investors in choosing funds based on their investment goals and risk tolerance. Broad categories include 1. Equity schemes invest primarily in stocks offering long-term growth potential. They include large cap fund, large and mid-cap fund, mid-cap fund, small-cap fund, dividend yield fund, value fund, contra fund, focused fund, sectoral or thematic, ELSS, flexi-cap fund, and multi-cap fund. 2. Debt schemes focus on bonds and money market instruments, offerings with varying durations, such as overnight fund, liquid fund, ultra-short duration fund, low duration fund, money market fund, short duration fund, medium duration fund, medium to long duration fund, dynamic bond, corporate bond fund, credit risk fund, banking and PSU fund, gilt fund with 10-year constant duration, and floater fund. 3. Hybrid schemes combine equity and debt, with subcategories like conservative hybrid fund, balanced hybrid fund, aggressive hybrid fund, dynamic asset allocation fund or balanced advantage fund, multi-asset allocation fund, arbitrage fund, and equity savings fund. 4. Solution-oriented schemes target specific goals, such as retirement fund or children's fund. 5. Other schemes include index funds or ETFs and fund of funds, focusing on passive investments or diversified global exposure. Equity-oriented schemes carry the highest risk, followed by hybrid schemes, while debt schemes are the least risky.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.